This is an interesting start to a week that, on one hand, is a holiday shortened week with only 3.5 days of trading. On the other hand, we've got jobs report at the end of the week. We had ISM today. We have FOMC minutes too at the end of the week. So a busy week as well. And we started off with a very interesting technical pattern. I'm going to break that down, how that impacts our posture, and look for a trade idea that's representative of the broad market as a whole and what's going on with rotation. So let's go ahead and get started. Today is Monday, July the 2nd, 2018. This is the Market Outlook from MarketScholars.com. My name is David Settle. Thanks for tuning in. I appreciate you guys watching today, especially those watching this for the first time. Glad you found us. Keep coming back for more. Subscribe to our YouTube channel by mousing over our Market Scholars logo in the bottom right corner of your video. Click that red subscribe button that pops out. Like tonight's video, click the thumbs up icon that's down below. That tells me that you want me to keep doing these videos when you click on that. One click feedback. Comment on anything that stands out to you from tonight's video. Join our Daily Market Outlook email list. There's a link popping out in the top right corner of your screen. Click on that link. That will subscribe you to our list. Follow me on Twitter for more content like this throughout the day. Join our Market Outlook community on Facebook. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicator. Actually, let's take a look at it over here. You can see we started off really bearish today. You see the open, is way down here, and then we ended up closing higher than where we opened. So, interesting day. You can see the range was above average. As small as today's move was, by the end of the day, it was a bigger than average range. You can see the 3-month return is still really positive, 4.25%. So I mean, as bearish as we've been, that's your 3-month return. Now the 6-month return is not too much, and we're 6 months into the year, so they're about the same year to date. But that just kind of gives you some perspective there on how bearish we've been this past week or two. Bouncing back up, the intermediate lines turned up because of that. The near-term line, momentum line both turned higher because we moved up so far off today's low point. So, pretty decent move. Again, holding the 50, even at the low today, holding this low that we've had over the past week and the 50% Fibonacci retracement, you can see getting back up there. So, back to a bullish posture. Weak because it's just barely turned up, number one. And number two, it's still pretty darn low. But bullish nonetheless. And of course, appearing like it's trying to form a new intermediate low point, which would obviously be higher than the last intermediate low point, which was down in, well, actually this one here. These were successive intermediate lows that were slightly higher. You can also see too, if I zoom in, that the lowest low that we got was on Thursday, got to a low of 2691.99. So that's the low day during this pullback. The highest level that day is 2724. You see it in the top left. I'm looking at those numbers above that year-to-date tag, 2724. So we closed today 2726.71, right above that. So we closed above the high to low day again, as bearish as it may seem, and especially since we kind of were bullish Friday, but we finished at the lows of the day. You look at the Dow Jones Industrial Average, at about half the gain, but still similar pattern. Has a strong bearish posture because the intermediate lines in the lower reversal zone. Remember, it doesn't stay down there for very long unless we're like in bear market mode, which obviously we're not because we're not breaking lows. This is the last intermediate low point, not this one, because that never got below 50 here. So this is your last intermediate low point. We're obviously not forming a new lower low there yet, at least. And of course, the last intermediate low here is 38% Fibonacci retracement. That's as bullish as it is. Really good bullish day on the NASDAQ, closing up higher. And then finally, taking a look at the Russell 2000, similar to move to the NASDAQ. Still got a bearish posture because it's been pulling back a little bit more lately the last few days. But nonetheless, you got intermediate line, momentum and near-term, both short-term sentiment lines turning up. So if we're going to maintain bullishness on this near-term bounce, this so far very short-term bounce, we need to see the blue lines for all of these indexes getting above 80. That will confirm the bullishness. a new bullish intermediate run. Remember, the intermediate line's got to get above 50 for it to be to qualify as a new intermediate, as new 1 to 3 month intermediate run. And you can see they're all below 50 right now. So we're not out of the woods yet. We're not bouncing yet. Even though we've closed above the high of the low day, we're technically not bouncing above this kind of area. Once you do, then we'll obviously be a lot more bullish and expect a longer run. And remember, there is seasonality at play here heading into the middle of the month, the expiration. That's typically bullish. And also remember today too, a lot of people noted that today is the most bullish day of the whole calendar year. Didn't look that way at the beginning of the day, but by the end of the day, you know, and you can come up with whatever reasons, but the reality is, so just strictly from an almanac, you know, again, looking at like the weather, you could say, well, that's usually the hottest day of the year. Might not be every year, but this is usually the most bullish day. It's got the most bullish closes out of any calendar day, any day on the calendar year. All right, so really quickly before we look at the other charts, I did want to point out we do have a new look on our MarketScholars.com website. If you haven't been there yet today, this is what the Market Outlook post will look like if you're watching this in the Market Outlook post right now. You'll notice a few things, and again, as always, you'll be watching it here through the video. There's a brief paragraph kind of discussion of what's going on in the market forecast. This link will take you to the forums to make sure you participate there. Now, you have to subscribe over here to be able to participate in the forum. So you can do that for free. Make sure you click on that link and subscribe. But love to hear your comments and feedback and questions and about today's video, posture or trade idea there. You can see our classes that we have coming up that we're teaching here throughout the week. You can also see other posts for some of the tools that we offer our premium subscribers there. 3 things I'd like you to do, 3 clicks to tell me you want me to keep doing these videos, me and Brandon to keep doing these videos. 1 is to like it here on Twitter, number 1. We want to get that number up to 200. We've gotten close before, but we like to get that, at least I have, up to 200. Second is to like it here on the blog, and then the third is to click that. It will take you to the Facebook page. If you're logged in on Facebook, you can like that today's post on our Facebook page. If you haven't signed up for our daily Market Outlook email, here's the form that you can do it in right here. And of course, you can share tonight's Market Outlook on any of these platforms by clicking on either of these buttons. See how high we can get that number up. All right, looking at the long-term view now of the S&P 500, you can see today's move got us close to the 50. You're still below the 50-day moving average, and it's still falling, so the gap is down. Again, I don't expect that gap to get to 0 anytime soon, right? It goes up and down, up and down. We just happen to be on a downward move right now to potentially a higher low point, and that you would expect to bounce off of and continue higher. If you take a look at the 3 green arrow chart, again, we still have 3 red arrows, so we're still shaded pink here. So, you know, again, just as a reminder on the market forecast, we are back to green. It's a light shaded green, but we're back to green there. The long-term chart, remember, is green as well. The 50-day is above the 200-day, right? So we're still green there, and then this one is still pink. So we're not back to being fully bullish yet, right? You know, on the markets. We still got a little bearishness, and we're still weak on that market forecast. If you take a look at the 2 line versions here, you can see we're still below the 8-day moving average. The MACD and stochastics are rolling up. The stochastics is almost crossed above its moving average. The MACD is getting there too, so not quite yet, but you expect it. Because of the long-term trends, you know, and the fact that we're just starting this market sentiment run, and this potentially could be number 2 on the intermediate runs, we expect those lines to cross up above their moving averages. So on the short term, you can see, you know, the rally. So we gapped down and filled in the gap, hit it for resistance initially, but then filled in that gap and then some, kind of getting up, filling in the opening gap here after we filled it in at the close on Friday. So filling in that gap, lower high and a lower low, but the fact that the low was at the open, the close was at the high was at the close, and we closed above yesterday's low point. It's a very positive development. No new four-week low point. That was over here. We're not going to get a new one for a while. The high is still about a week or plus from moving down. So, we're still in the lower half of the chart, a little inverse head and shoulders pattern developing. Obviously getting above those two highs, the neckline, would also be getting above the midpoint. So, which would be back to, kind of a shaded green area here. So we're kind of shaded pink right now on the short-term chart because we're in the lower half of the chart. So again, you see how we're not all the way green, right? The long-term chart's still green. The market forecast is weekly green. The 3 green arrows is pink, and now this is pink because we're still in the lower half, even though, again, we expect that to eventually move its way higher. From a volatility standpoint, you can see we are starting to come back down. Volatility is making its way down from a lower high after coming up off a slightly lower low. And then from a relative standpoint, you can see we started out the day in the bearish zone and pulled back into the neutral area between 90 and 95%. Of course, you can see getting below 90 will probably, turn that will turn it green here on the volatility standpoint. Right now we're kind of, there's pink, we'd be shaded pink up here, we're shaded green down here. So we're heading towards green in a lot of these charts, but not quite there yet. Finally, when you take a look at the range here, you can see the range. Let's see, no, it's actually on the 3 green arrow chart. I got the volume down at the bottom. So let's pull up SPY. So you can see the range above average, 2.8 points. And then down here you can see the average, the volume was at 63 million, so below the average. So when you look at that on the averages, you can see 2.68 is just up above on an absolute basis, just above the average. We're still in bullish zone below 1%, and it looks like we might be trying to peak here. And as we bounce up higher, don't be surprised if the ranges get smaller and the volume gets smaller. You can see they already have. After pretty decent ranges here and relatively high volume, we're starting to taper that down. And when you taper that down, that's actually pretty bullish. So to summarize today's market outlook, using the technical charts here, we can see that this whole time we've looked at this pullback as an intermediate pullback. So which is a little bit bigger, obviously, than a near-term pullback, but still just a pullback. The intermediate run that preceded, obviously, didn't last 3 months. It lasted almost 2 months on the S&P 500. We pulled back down now to Fibonacci support, and it appears we're trying to bounce off of that, and that's the expectation, considering the market sentiment line just crossed above 50 here on this previous intermediate rally. So we expect multiple intermediate rallies, and we may be looking at the beginnings of one right now. Again, doesn't mean it has to be too big, 1 to 3 months. So we might get a month, we might get less than a month, but it appears that a lot of these things that are weakly shaded green to no shading to pink, it appears that a lot of these elements, technical elements, will start to turn themselves up to the upside, and we'll be bullish here for a while. That would obviously be our expectation based on the market forecast indicator and this market posture routine, market outlook routine. So what do you think? There's a link popping out in the top right corner of your screen. Click on that link. Tell me if you agree or if you disagree with tonight's market outlook. If you disagree, then scroll down to the bottom, comment on what you're seeing that's different. That in this case may either make you a lot more bearish than we are right now, or more bearish and not expecting this bounce to occur. So let us know down in the comment section. All right, when we take a look at what's driving the price action now, and veer off into that discussion, you can see the week's calendar. There's obviously only a half day tomorrow. It's an early close on the stock market, so it should be 1 p.m. Eastern. The market will be closed, and then on Wednesday, closed for the 4th of July holiday here in the U.S. And then by the end of the week, you notice we got the jobs numbers coming out, so that's going to be a big one. At the end of the week, you can see a lot of the Wednesday data points got pushed on Thursday. The highlight's going to be the FOMC minutes, and tomorrow you got factory orders coming out as well. So, but today we had ISM over here on the left. You can see a big number back up to 60. We've only got 3 readings above 60 during this last little bit since the post-Trump election. rise in this. It's a sentiment survey. Remember, this is surveys, not actual data, but surveys and what people expect from the manufacturing sector. So that was a relatively strong number. Construction spending, you can see, was not as strong as it was last time, and you can even see the 4.5%. Now it was revised down. These numbers were revised down, so it was less of a drop than what you'd expected, and about where the estimates were on the consensus. And you can see that's going to have an impact on GDP. GDP bounced back up last week up to 4%. Actually, excuse me, bouncing back up today up to 4.1%. There, so after dropping below 4% last week, because we've been dropping on that, and we were also dropping into the negatives here on the surprise index. It's been bringing down the rate hike odds. You know, they're still high, still 70%. So still high probability we'll get another rate hike in September, but not as high as it's been. A little bit of weakness here in the economic indicators. And you can see it's starting to look better overseas, but still a lot more negative overall. And if you look at, what's driving the price action, I mean, here's the, look at the sharp move in crude oil, up 14% on USO in the past 2 weeks. Everything else, and way, way down here. In fact, stocks are all negative. It's been bonds and the dollar has been relatively flat. So if I just look at just today and how we started the week, it's a trade war day. That's the trade war still in the news. The markets, it's been positive for the currency, and you can see it's been negative for all the other countries. In fact, look at these Asian countries. They've been hit the worst. Japan, China, and South Korea all hit the worst on this tariff news and potential for a bill to be passed that would allow Trump to the Trump administration to raise tariffs without approval, congressional approval, or WTO approval. And so that kind of sent the markets into this trade war and really put some pressure on these European. There's Italy, that's the UK, but you can see there's France and Germany all down on the day, and the US, the only one out of the 12 biggest economies out there that had an up day. When you look at their charts, you can see some of these. Look at Japan. Japan got an oversold cluster today. Most of these European countries got oversold clusters already. I mean, last week, Italy and Germany, France over here, and the UK. You can see also South Korea had oversold clusters. China had some, yes. I mean, they're all oversold. So from a foreign stock market perspective, the U.S. is winning the trade war battle. There are a lot, Brazil has been already oversold, so it's been kind of holding those gains. And some of these are just starting to roll over, like Canada here, and Russia looks like it's been outperforming. In fact, Russia's got the only other bullish intermediate posture. All of these are bearish and really bearish. The only one that's not below 20 is India. Everything else is below 20 or below 10. So a lot of these have been really bearish and intermediate postures, very oversold globally. But in the U.S., we have a bullish posture, and in Russia, we've got the most bullish posture out of all these. So again, aside from Russia, which is not really involved in the trade wars, you can see from a European and Asian perspective right now who's winning it. At least simply from a stock market perspective, which stock markets are being hit the worst on these trade war fears. And it's a reminder that it doesn't matter. Political opinions don't matter here. What matters is what the markets think, and the markets price in expectations on investor expectations and sentiment based on the news that's widely public out there. So again, you can kind of see how the price is being, how this price action is pricing in those expectations in all these different areas, and it's all relative, right? And so you might be super bearish in the U.S. right now, but then what are you going to buy? And right now, nobody's buying anything in Europe or Asia. It's mostly U.S., and that's why it's been able to hold up and not be as bearish as a lot of people expect or think it should be, because everything else is just right now a lot more bearish. And also, as a reminder too, as we get more and more bullish, it doesn't necessarily mean that everything has to go up. Remember, correlations go closer to 0 when the market gets bullish. It goes closer to 100 when everything's bearish. So when we fall, everything falls, just to different degrees. But when we can go up, different things will go up at different periods. And you can see right now what's really gaining the most. And utilities is very, very strong. It had this is sorted in order of who outperformed today over here on the left. You can see, whoops, XLK was the first one. These four are the only ones that outperformed the broad market today. The rest of these lagged behind, energy lagging the most. Discretionary holding that moving average, still rising, still got that bullish posture. In fact, all of these have more bullish postures now. Industrials is still stuck down here in oversold territory, but trying to hold that low point. Materials is also in that oversold area below 20 on the intermediate posture, but still trying to hold support as well. Real estate, looks like it's having a little bit of a bearish candle there, and staples still pulling back to support. You expect that to bounce. It's got the strongest intermediate line out of all of these, aside from real estate and utilities. All three of those showing strong bullish postures. But you can see technology, you would expect that to be, it's been a market leader before, you expect that to make its way higher, and you can see how some of these others, healthcare would be a little bit more bullish if we were started to bounce. Discretionary would be a little bit more bullish if we were start to bounce up here. Lagging, but be more bullish, and you can see which ones. You still got these safe haven areas which are leading. You also see that too in the different asset classes. I'll bring that up here really quickly, this intermarket analysis chart. I wanted to point out the preferred stock ETF, which is absolutely killing it. So again, the markets are bullish, or trying to get bullish, and it's kind of being led right now by these safe haven equity areas. All right, so if you put that combination of technology and safe haven, large cap, the safer stocks together, you've got Microsoft, one of the biggest names, tech stocks out there, sitting right at 100, a nice round, not $100, $100.01 today, but looking like very similar to the market, trying to bounce off of closing of the high of the closing of the high of the low day. Getting 2 green arrows, and the MACD is rising, not quite the 3 green arrows yet. You can see when you look at the 3 line versions, you can see it still hasn't gotten above its moving average, still hasn't gotten above 0. Stochastic's also close to crossing above its moving average. Unlike the market, you can see it is above the 8-day, of course, above this 30 as well. A little bit of an engulfing pattern, engulfing Fridays because of the gap down and the rally higher. So bullish candlestick pattern, so bullish move going on. You can see it's not quite bullish in all the indicators. The let's see here, let's McDonald's, let's pull up. Forget I have to pull up the symbol every time. So there's a Microsoft. So the positive index, the positive directional index, is still down here. So still not bullish yet. So there's potential actually for more bounce in that. And then you look at the Bollinger Bands for Microsoft, and you can see we're getting back. We're closing after closing below the line and pushing against the bottom. We're closing back up above the line. So it looks like again, if the theme is that the market's going to bounce, you can see getting above here. You can see that getting above the line with this down at the bottom. If the market's going to slowly bounce, and we've got an obvious low point here developing on Microsoft, then from these old high points, this kind of line that's drawn here, then there's an opportunity for a bullish trade, even if it's not the most aggressive. And of course, a less aggressive bullish trade is to sell a put, with a 30 to 40 delta, selling that 97.5 put. We'll buy the 95 put in case things tank for protection, and you get a better than 30% return on risk, a little bit higher than what we want. But you can also see too, when I analyze that, it's got let's move this to the August expiration. It's got a relatively high probability of expiring. in the money, or excuse me, out of the money. So it'd be 62.5% potential for max for gains on this. You can see there's not much difference between max gain, or $2.50 difference between max gain and max loss. So it's an either or trade when you're trading verticals like this. So pretty decent odds that we'll get the max gain. You can see that's the break-even point. So if we were to get past that break-even point and get to this level where we're trying to get 76 bucks, then you can see when we lose 76 bucks is when we can, right there where my cursor is 93.5 as of today, that's when we get out of this trade. And if you look at the chart, 93.5 is way down here. Now that's going to move up slowly as time passes, but that kind of gives you an idea that we can have a down move below support, get out with as much of a loss as we're trying to get on the gain, which is what you'd want to do on a vertical spread like this. So that sums us up for today. Let me know what you think. There's a link popping out in the top right corner that will take you to the forums, like I showed you before earlier. Comment on anything that you think about tonight's video. Any questions, any comments you have, any topics you want to create. And of course, if you see other topics that have been created, reply to any of those. Let's talk about the market posture today, and as well as today's trade idea. So let's share that in the forums. As always, thank you very much for watching. I appreciate your time watching these videos day in and day out. Remember to subscribe to our YouTube channel, like tonight's video, and comment on anything that stands out to you. Follow on Twitter for more content, and join our Market Outlook community on Facebook. Again, thanks everyone. Have a great evening, and we'll see you all next time.